Hey everybody, welcome to Trading Capital's Exclusive Analysis. In today's video, we're going to be discussing the XLY, the Consumer Discretionary ETF. So this ETF is the two largest companies are Amazon and Tesla, and this gives you a good barometer as to how the consumer is doing as a whole. So consumer discretionary is at a very tricky inflection point here. And what I mean by that is let's dissect this price action. So we can clearly see we're making lower highs on the charts. This is your main downtrending trend line from your all-time high. You've hit a 1 pivot, 2 pivot, and now you're tagging that area right here. Not only do you have this downsloping trend line, but you also have this upsloping trend line. What's important about this upsloping trend line is it connects your main pivot low to another pivot here, your wide range breakdown bar, bear flag consolidation, and bigger confirmed breakdown to the downside. Now you've done a full retrace all the way to this upsloping trend line. You've had basically 1, 2, 3, 4 weeks of upside right into this resistance zone. The probabilities do dictate that we see lower price action, but the big question is, are we now going to form what could be early stages of a right shoulder development? So here you have a left shoulder, here you have a potential head, and this could be now forming a right shoulder to make yet again another lower high and potentially triggering a head and shoulders, which is notoriously bearish for the overall pattern. Now, if you were to come down and hit this trend line, if you get a daily close or a weekly close below this trend line, sorry, if you get a weekly close, because this is a weekly pattern, if you get a weekly close below this lower boundary trend line, you can then calculate a downside target on the XLY all the way down to about, on the chart 115, which would make a new low in the trend. You would have mega support there with this previous pivot in 2018. Now, you can only validate this pattern once you trigger the neckline and get a breach. So I'm expecting that price action actually comes back down to this trend line in the coming weeks. We may get a little bit of a bounce off that area to take us back to, say, the center point, and then we watch for potentially a breakdown. But I do think price action is likely to consolidate and potentially head lower to test this area again to see if we get a clean break and trigger of this head and shoulders. Right now, the technical pattern has not triggered the downside move, so we have to wait and see over the coming weeks if we get that rounding formation to the downside. And for anyone long, if you see a break and weekly close below this impulse green bar, back inside this red bar breakdown, this is going to be very bearish. So in my opinion, if you're holding longs, the last line in the sand is basically getting a weekly close below that. If you get a weekly close below that, you're likely going to see many market participants exit their longs and start shorting this market. So I'm looking very carefully. I'm watching this 160 level on the weekly chart to see if we close below this weekly green bar candle over here. So lots of interesting price action ahead, and we'll just have to see if we get this right shoulder formation or if we actually break through this downsloping trend line. Now, if we break through this downsloping trend line, obviously this head and shoulders would be negated. So I gave you the bearish scenario here. For the bullish scenario, if we get through this lower boundary trend line, then look for consolidation above it. If you get a few weeks of sideways consolidation, you can actually potentially play this on the long side. Why is that? Well, let's look at this for instance. You potentially have the opposite pattern, an inverted head and shoulders that could be forming on the weekly chart as well. So this is always the scenario. You have to look at both the bullish patterns and the bearish patterns. So this would be your left shoulder, this would be your head, this would be your right shoulder. Again, this only triggers to the upside if you get a weekly close above, call it 173, 174 on the charts. If you get a close above this trend line, then you have a potential upside move that can trigger basically a big move, making new all-time highs in the XLY ETF. So again, it's a big inflection point for the markets right now. Since you are at resistance, do favor a pullback, but how deep is the pullback? Time will tell. We just have to monitor it very closely. Take care, everybody, and we'll see you in the charts a bit later.